Jose Rasco, we're nearly through first quarter earnings season here in the U.S. What's your view of earnings so far?
Well, earnings have been surprisingly strong. We've seen a lot of companies beat on the earnings side, not as many beat on the sales side, but they've been strong given the harsh weather we saw in the north and the south in terms of storms and ice, and in the west with the fires and all the other problems we had, so the forest fires. So earnings so far have been strong. If you look at employment data we just got this morning, I think it points to some pickup in growth throughout the rest of the year. So
there certainly were a lot of acts of God working against the U.S. economy, but I guess corporate America pulled through. What have been some of your favorite sectors that have reported thus far?
Well, I think if you look at the market in general, the U.S. economy, I think the energy sector continues to look pretty good. Growth has been very strong. I think last year it produced 87% of our own energy. Continues to be a strong sector. Agriculture has been doing well. Is another sector we like a lot. And in terms of the market, utilities have done well, but I think on the earnings side, we're looking for technology to make some sort of a bounce back here at some point.
And the Dow is hitting new highs. What's your advice to investors right before the summer? Do you sell in May and go away, or do you stick with it through the rest of the year?
Well, we're a little more conservative, and we like yield. So we're very interested in dividend yield plays, and I know that's an old story, but it's a story that's worked for decades. So we think the dividend yield story still works, and we like large cap companies. It's a nice place to be.
Then let's talk a little bit more about yield. You like Latin American debt. You getting a nice yield down there?
Yes, we are. We're seeing, we saw some spread compression in Europe, so we've seen yields come in as people have bought European debt, especially European high yield and a lot of the sovereign debt. In Latin America, though, we're still seeing yields are pretty decent. So a lot of investors are willing to take a little more risk, as it were, but we think the market isn't as risky as people think. It's a $1 trillion market, and more than about 3/4 of EM corporates are now investment grade.
And specifically in Mexico, you say that's a nice place for investors, not just to vacation, but to invest as well. How should they do it?
Well, the equity markets have been troubled with all the negativity we've seen in EM. We think that'll turn around in due course. We think Mexico, with all the political reform, is going to be positive longer term. A lot of direct investment should be flowing into Mexico beginning next year. And then we're buying the bonds. We like corporate bonds there, where, again, you get that yield differential. And we like the country and a lot of what they're doing in energy, agriculture, and different sectors such as telecom.
Jose Rasco, thanks for coming in.
Thank you for your time.
And thank you for watching The Street.